Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com, and this is the Elliott Wave update for Wednesday, March 31st, 2021. A little bit more to bring tonight with the fact that the market did just explode higher this morning, pretty much straight from the opening, and surpassed levels where it was no longer a little wave two correction. It hasn't quite broken the next level, which would take it out of contention for being for the next wave two, shall we say, and that would be up here at 13,271. So we continue to view the market as being involved in a corrective cycle wave 4. And within that cycle wave, there are going to be 3 waves of primary degree. And within that first wave of primary degree, there are going to be an additional 3 waves. Right now, as it's being counted out, an additional 3 waves of intermediate degree. And that's what will remain counting. The absolute first larger leg down, so the first primary wave A down, and it is taking a shape of its own ABC. And within that, we have finished the A wave, and that was back in the beginning of March, mid-March. And from that level, we have now been in process of tracing out an intermediate degree B wave. And within that, there have been a couple of different interpretations that I have presented and kept in with my primary count, or my primary count, and use the one that I'm now showing you as my alternate. And today's activity has kind of shifted that, and that's why I continue to keep an alternate and a primary count, or preferred count. And so I've rearranged things just a little bit. I've continued to have this as the ending point for intermediate wave A, and then that's minor wave A of intermediate B, minor wave B of intermediate B, and now we're in a minor wave C advance. And right now I'm counting all this that we were trying to count as corrective as a first wave, which can and did form a series of 5 3-wave moves. And so, and actually, we're not doing that in-depth discussion at Elliott Wave right now, but my intent is to very soon put together a 1-day or several-day webinar in a study of the Elliott Wave principle, and also introducing Fibonacci and how I use Fibonacci, retracement and extensions to aid me in analyzing where I think the market is going, even way down to a short-term period that we use on a day-to-day basis. So here we are. This is going to be a 5-wave decline, 5-wave rally. So there's wave 1, wave 2. We're in wave 3. I could count it, but I believe this is going to be 1, 2, and this is 3. This could be 4. 4 may not be done. It may drop down and maybe come back down to the 1 hour 50 or 20, excuse me. If it comes down to the 1 hour 50, that'd be way too far. And my expectations would be for the C wave, and I'm going to put those Fibonacci's up there right now. And of course, I can't do it that way. I got to change this. Undo, remove. I can just put it back on. So we're now looking at this C wave. And here's wave A, here's wave B. So now we're looking to the C wave. The C wave will ultimately, if this is actually in the one in force, because what was our preferred count is now the alternate becomes the preferred. And that could switch around. We allow the market to tell us, but today's advance really kind of cleaned up a lot of questions on this choppy, sloppy move. And it kind of burst out and rallied pretty intensely. Any case, this would be a minimum. And it's not quite going to get above that high. And that would be okay, because in essence, if this all is all that it gets is 13,276, well, then I'm, like, oh, okay, not going very far. I would suspect that it's at least going to get about 13,172. So an additional 100 points above that could complete it. It would be a failure, very slight, but still, one of the relationships of wave C to wave A is that it comes in at 0.618% of wave A, and that would be right here. Next, we have a 70.5, 78.6, and then right above all of that, we have 100%. So if wave C is going to be equal to wave A, then we have a shot at getting all the way up to 13,688. We're not breaking the all-time high, which is 13,900.50. So this B wave was totally fit. Personality-wise, these moves have been corrective. These moves have been jerky. These moves have been sudden. These moves have been out of the blue. And those are all consistent with what you can get in a corrective B wave. And as I've been describing, they can be more difficult. They can really get you to focus on what is going on. So tomorrow, we may start with a little bit more downside. I kind of really would be looking, because of the nature of this wave, for it to be not that deep. If the rally is really going to continue, I don't really want to see it go too deep before it starts to head to break above 13,158. And that's why this level, which we before had labeled as a small minute wave 2, that if this was also an even smaller wave 2, it should not, it can't break that level. And it came pretty close today, which is why I flipped around and redrew and put in the preferred count, because I expect that it will. Now, having said that, I expected that it was going to go down and do what it did, and then continue to rally, maybe put in a slight new high, and then drop. Well, it put in that high, folks, and it just kept on going, kept on going. Blew that right out of the water. Tomorrow, I'm looking for higher numbers. Here we have where we can go. Today was a very strong day. Whether it happened again tomorrow, or whether April Fool's going to be like, Yahoo, April Fool, we're going back down, anything can happen. Can it happen? Of course it can. Today was a folly for fund and hedge fund managers to kind of really beef up their books, because it was the end of the first quarter, and they've now got to put out the reports. And they got to tell all the clients how wonderful they are. Okay, so pump everything up, put those on the papers. We were long from here. Look where we closed. We're all making money and we're solid. Okay, so who knows what tomorrow might come back and it's like, oh, are we back to what we're supposed to be doing? Boom, go down. So I'm leaving this open. Let the market tell you what it's going to do. If it starts to break down below our moving averages, below Fibonacci support, is what it should be. If it starts breaking down and it gets down below this 200 on an hourly chart, I'm not going to be thinking that we're going to go up here. So it forces us to then relook at the entire structure and see let the market tell us what it is. Right now, this is kind of our best estimate on what could be happening. So upside, we have our targets and our breakpoints. Downside, we have our breakpoints. We're going to use these moving averages. We're going to use these established Fibonacci's. You can draw additional Fibonacci that might even tighten it even more. But if it starts getting down here, folks, no, I don't believe then it's going to be what it is, that this is over. Did not break this high and turns around and just goes down. And then we have to go back to what was our preferred, right? coming into today that this did complete, and then this was a minute. This was a minute, all a part of this larger minor third, and that would be in progress. Right now, we're saying it's not, but if it is, then once again, what we saw coming up, we should see it going down just as fast, just as persistent. Seriously, at this stage, just as persistent. I'm preparing for both because you need to trade what's in front of you. That's what I'm going to tell you. You cannot allow these moves to hang you up and, oh my God, I'm not expecting it to go up, so what do I do? You participate because, again, you switch your gears, you play against your moving averages. I'm going to tell you, this rally this morning here, you've got to look at this 4 and the 8 on the hourly. It absolutely hugged and touched all the way up and kept it going. So that tells you when you're getting a pullback and it stops at the 4 on your shorter term charts. On the 1 minute is where it works like a charm. Your 4 and your 8, these are the trading tips. Your 4 and your 8 are going to guide a rally, and they could guide the decline as well. If this thing is like dropping like a stone and can only rally back up to its 4 and then flips and goes back down again, well, it's making it pretty clear that the sellers are in control, or in this case on the upside, that the buyers were in control. So we use our moving averages to guide us during a move like that. So don't worry about why it's going up, or why it's going down. Flip your attention to following your moving averages and make some good money. Today was a huge day trading wise. And that's what it's all about. And so when it comes down to you're here to make money and you want to trade to make money and you want to become a professional trader, hey, this is how. This is how you do it. Does that mean you have a good day every day? No. There are days that these moves will catch you by surprise, and you might have to flip a position and now earn back that you just dropped $1,000, and you got to pick up that $1,000 again and then keep going. So you don't get a chance to sit there and really complain about, oh my God, I just lost this money. Oh my God, I just did this, I did that. You just go, you just change and you move on. And if you don't, the market ain't stopping to say, hey, we left Michael behind. We better go back and get him. That is not going to happen. So it's up to us. It's up to us as individuals. If this is what you're going to do and this is how you want to do it, then this is really what's involved. That's all I'm going to put in for tonight. It's already longer than I anticipated. I wish everybody a good evening and good trading tomorrow, Thursday, April the 1st. Beware. Also, there will be no update tomorrow night because Friday is Good Friday. Markets are closed. Happy Easter, everybody. Next update will be Easter evening.